Stop right there if you're telling your buyers to shop around for the best mortgage rate. I know that sounds crazy, but here's the thing that'll blow your mind. The lowest rate almost never saves your buyers the most money. In fact, most rate shoppers end up paying thousands more than they actually should. And today, I'm gonna show you exactly why shopping rates alone is one of the biggest mistakes buyers make and what you should tell them to do instead. Stick around because at the end, I'll reveal 3 questions your buyers should ask every lender that most loan officers hope they never hear. Hey there, I'm Brock Irwin. I'm here to help real estate agents protect their clients and close more deals. If you're new here, I share insider mortgage strategies that help agents become trusted advisors, not just door openers. Now picture this scenario. Your buyer calls you excited because they found a lender offering a rate that's an eighth of a point lower than everything else. It sounds great, right? Wrong. By the end of this video, you'll understand why that great rate could cost them thousands and how to guide your buyers through the mortgage maze properly. And most importantly, how this knowledge makes you the agent everyone wants to work with. Here's what most buyers don't understand about mortgage rates, and honestly what some loan officers don't want them to know. The rate is just one piece of the puzzle. Imagine if you chose a car just based on the color. It sounds ridiculous, right? But that's exactly what happens when buyers focus solely on interest rates. Let me break this down for you. When a buyer shops rates, they're usually comparing apples to hand grenades. One lender might quote a fantastic rate, but load up the loan with origination fees, processing fees, underwriting fees, and a dozen other charges that can add thousands to the total cost. Now, another lender might quote you a slightly higher rate, but with minimal fees and better terms. Here's the kicker. The timing of when you lock that rate matters just as much as the rate itself. Market moves daily and even hourly, and a lender who quotes you a great rate on Monday might not be able to deliver it on Friday when you're ready to lock. Meanwhile, your buyer is stuck in contract, deadlines are approaching, and suddenly that great rate becomes a deal-breaking nightmare. And let's talk about qualification differences. Not all lenders are created equal. Some specialize in certain loan types, others have stricter debt-to-income requirements, and some move faster through underwriting than others. Your buyer might spend weeks chasing a rate from a lender who ultimately can't close their loan type. Now here's where it gets really interesting and where you can become the hero in your buyer's story. Most buyers don't realize that lenders can manipulate what they show you during the shopping phase. Picture this scenario. A buyer gets quotes from 5 different lenders. 4 of them provide detailed breakdowns, but one just says, great rate, low fees, we'll take care of everything else. Guess which one sounds the most appealing? The vague one, of course, because buyers fill in the blanks with what their hopes are, not just reality. By the time they actually get the loan estimate 3 days after their application, they're often shocked by the fees they never saw coming. But now they're committed, time is running short, and changing lenders feels impossible at this point. And here's another hidden trap. Prepaid items and escrow requirements vary wildly between some lenders. Some require larger escrow cushions, others have different requirements for property tax and insurance prepayments. These aren't loan fees, but they absolutely affect how much cash your buyer is going to need at closing. I've seen buyers get surprised by thousands of dollars in additional cash requirements just days before closing because nobody explained these differences up front. Now, the smart approach, understanding the total cost of ownership, not just rates and fees. Let's talk about timing, because this is where rate shopping can absolutely destroy deals. Every lender has different processing times, underwriting standards, and approval procedures. Some can close in 2 weeks, others need 30 days minimum. Your buyer might find the perfect rate from a lender who takes 45 days to close, but your seller won't extend the contract. Here's what really happens behind the scenes. When buyers shop multiple lenders, they're often applying with several at once, hoping to compare options, but each application triggers a credit pull, and while multiple mortgage inquiries within a focused time frame typically count only as one hit to the credit scores, these applications themselves create different complications. Different lenders use different credit models, have varying debt-to-income calculations, and interpret guidelines differently. One lender might approve a buyer easily, while another denies them for the exact same financial situation. Imagine if your buyer gets pre-approved by the low-rate lender, you write an offer based on that approval, and then during underwriting, that lender discovers something they don't like about the buyer's situation. Now you're scrambling to find a backup lender, rates have moved, the seller gets nervous, and everyone's stress level is now through the roof. This isn't a hypothetical scenario. It's a nightmare that plays out in real estate transactions every single day. The solution isn't avoiding rate shopping entirely, it's shopping smarter with professional guidance that considers all of these factors up front. So what's the solution? This is where working with an experienced mortgage broker becomes invaluable, and why smart agents partner with brokers who understand these complexities. Instead of your buyers shopping blindly, now a professional broker does the shopping for them, but with full transparency about the trade-offs. Here's how the smart approach works. First, we analyze your buyer's complete financial picture, not just their credit credit score and income. We look at their cash reserves, we look at their employment history, the property type that they're buying, and their timeline. Then we match those with lenders who specialize in that situation and have the capacity to close them on time. We present options that show the complete picture: rates, fees, cash requirements, timeline, and lender reliability. Your buyer isn't choosing 5 different rates, they're choosing between 3 complete loan packages that we've already vetted for. But here's the real value. We manage the entire process with one point of contact. No more buyers calling you stressed because their lender isn't returning phone calls, no more surprises 3 days before closing, no deals falling apart because someone didn't understand the qualification requirements. For agents, this means cleaner transactions, happier clients, and more referrals. For buyers, it means confidence that they're getting the best deal for their situation, not just the lowest interest rate quote. And when problems arise, because they always do in real estate, there's a professional advocating for your buyer's interests. Now, as promised, here are the 3 questions your buyer should ask every single lender that they speak with. Questions that separate professional lenders from order takers. Question number 1, what's the total cost to close, including all prepaid items and escrow requirements? Notice we're not asking about fees alone. We want the complete cash requirement picture. Any lender who can't answer this specifically is waving a red flag. Question number 2, what's your average time from application to closing my loan type, and what could cause delays in my situation? This reveals whether they actually understand your buyer's file or if they're just giving a generic timeline. And question number 3, this is the big one. If rates move before we lock, how will that affect my total cost and my timeline? This question exposes whether the lender is just quoting today's rates or actually managing your buyer's transaction strategically. Any lender who gets defensive about these questions or gives vague answers is probably not the best fit. The best lender welcomes these questions because they demonstrate the buyer is serious and educated. Now here's the bottom line. Your buyers deserve better than shopping rate alone, and you deserve smoother transactions with happier clients. The mortgage process doesn't have to be stressful or confusing when you have the right professional guidance. If you're a real estate agent who wants to provide more value to your clients and close more deals with less stress, partnering with an experienced mortgage broker who understands these complexities is one of the smartest moves you can make. Your clients get better outcomes, you get smoother transactions, and everyone wins. If you're a buyer watching this, don't fall into the trap of shopping only interest rates. Get a comprehensive analysis that considers your complete situation, not just today's rate quotes. I'd love to help you navigate this process successfully. If this video provided value, hit that like button and subscribe for more insider strategies that help buyers and agents succeed. Drop a comment below and let me know what's the biggest mortgage challenge you faced recently. And if you're ready for a professional rate analysis that considers all of these factors, check the description below for how to get started. Thanks for watching, and I'll see you in the next one.